Most people believe that building wealth is a battle of endless effort. They imagine early mornings, late nights, and a life spent chasing numbers. But what if that story is wrong? What if becoming rich does not require burning out? What if ordinary people could quietly build extraordinary wealth? Without stress, without constant hustle, without trying to outsmart the market every day. That is where the idea of the lazy investor begins. A lazy investor is not someone who avoids responsibility. They are someone who understands leverage. They know that true power lies in setting things up once and letting time, patience, and discipline do the rest. They understand that wealth creation is not a sprint. It is a quiet marathon, and the smartest runners conserve their energy. You do not need complex charts or secret formulas. You do not need to spend your nights reading financial news. You only need a simple plan that grows stronger with time. The lazy investor is proof that you can build wealth while living a balanced life. You can enjoy your work, your family, your peace, and still let your money grow in the background. This book is not about shortcuts. It is about smart routes. It will teach you how to stop fighting against time and start working with it. Each chapter will reveal one quiet truth about building wealth the lazy way. You will learn how to create systems that think for you, how to choose investments that do not demand your attention, and how to stay calm when everyone else is panicking. So take a deep breath. Forget the noise. Forget the fear. We are about to begin a journey that proves a powerful idea. You do not have to run faster to get ahead. You just have to walk smarter. Now, let us start where most people go wrong. Let us uncover the biggest myth about success and money. The myth of hard work. Chapter 1. The myth of hard work. From childhood, we are taught that hard work is the only path to success. We are told that if we just keep working longer and pushing harder, wealth will eventually follow. And so we grow up believing that exhaustion is a sign of progress. We wear tiredness like a badge of honor. We think busyness means importance, but deep inside, something feels off. Because despite all the effort, most people still struggle with money. They work endless hours, yet freedom remains far away. The truth is simple. Hard work alone does not create wealth. Smart work does. A person who works day and night at a low-paying job might never escape the cycle of bills, while another person who works calmly and plans wisely may retire early and live peacefully. The difference is not in effort. It is in direction. It is not about how hard you row. It is about whether your boat is facing the right way. The myth of hard work keeps many people trapped. It teaches them to value activity over clarity, to fill their days with motion instead of meaning. They chase small victories every day, but never stop to ask the bigger question. Where is all this effort really leading? The lazy investor understands that more effort does not always mean better results. They know that wealth is born from ideas, habits, and systems, not from endless hustle. They focus on doing fewer things, but doing them right. They build a plan once and let it run on its own. They trust in patience more than panic. They choose rest over rush. And that is not laziness. That is wisdom. When you stop worshiping hard work for its own sake, you begin to see patterns others miss. You start asking, what is truly necessary? What actually moves me forward? And what just keeps me tired but stuck? The lazy investor cuts away everything that wastes time or emotion. They build a lifestyle where money works harder than they do. They spend energy only on decisions that matter. And then they let systems, automation, and compounding do the heavy lifting. The myth of hard work was created in a world that rewarded sweat over strategy. But today, information, technology, and global opportunity have changed the rules. Now the smartest thing you can do is learn how to make your money grow while you live your life. You no longer have to trade every hour for income. You can create systems that earn while you sleep, travel, or spend time with family. That is not a dream. That is what the lazy investor practices every day. This does not mean you stop working or caring. It means you start thinking differently. You replace effort with efficiency. You replace stress with structure. and you replace chaos with calm. Because true wealth is not built in noise. It is built in quiet moments of clear thinking. Once you accept that hard work is not the secret, you are ready for the real truth. The truth that success loves simplicity. And that clarity is far more powerful than complexity. The next step in your journey is to understand why simple ideas often create the greatest wealth. That is the power the lazy investor trusts the most. Now, let us move forward and uncover that secret. Let us explore the power of simplicity. Chapter 2. The Power of Simplicity. Simplicity is often underestimated. Most people believe that wealth requires complexity. They imagine that only the person with the most sophisticated strategies, the most complicated spreadsheets, and the most advanced financial knowledge will succeed. But this belief is misleading. Complexity often hides mistakes. It confuses. It creates stress. And it wastes time. The lazy investor knows that simplicity is a superpower. They understand that simple strategies are easier to follow, harder to break, and more likely to produce consistent results. When you keep things simple, you reduce the chances of making emotional decisions. You reduce the chances of overreacting to market noise. You reduce the chances of quitting when things get tough. One of the greatest examples of simplicity is the index fund. By owning a single fund, you can gain exposure to hundreds of companies at once. You do not need to guess which stock will rise tomorrow or which company will fail next month. You do not need to monitor every headline. You simply invest, stay consistent, and let the market work for you. Simplicity removes fear and doubt from the equation. It removes the need to constantly worry about what might go wrong. Instead, it allows you to focus on what really matters: time, patience, and consistency. Another aspect of simplicity is choosing fewer investments instead of many. Most people think diversification means buying dozens of stocks, funds, or assets. But over-diversification can backfire. It spreads attention too thin. It creates confusion. The lazy investor chooses a few high-quality investments. They understand these will grow over time. They focus on mastering a small number of ideas instead of chasing endless opportunities. Simplicity also applies to financial habits. Automatic saving and investing is one of the simplest and most powerful techniques. Instead of manually transferring money every month, the lazy investor sets up a system that does it automatically. This habit removes friction. It removes excuses. It removes the need to rely on willpower alone. Over time, small actions repeated consistently create extraordinary results. People often overcomplicate wealth because they think they need to control every variable. But control is an illusion. The lazy investor accepts uncertainty. They embrace rules that work in most situations. They invest in broad markets. They spend less than they earn. They let time do the work. This approach is not about avoiding responsibility. It is about focusing effort where it actually counts. The power of simplicity also creates mental peace. When your financial plan is simple, it is easier to follow. It is easier to explain. It is easier to trust. And trust is one of the most important elements of successful investing. Without trust, fear takes over. Without trust, even a good plan can fail. By embracing simplicity, the lazy investor frees up energy to focus on life, relationships, and personal growth. Money is no longer a source of stress. It becomes a tool for freedom. And when wealth grows quietly in the background, the investor experiences the real reward: time. Time to live. Time to think, and time to enjoy. Simplicity is not boring. It is powerful. It is strategic. It is the quiet engine behind extraordinary results. Once you embrace simplicity, you are ready to see why most people fail with money. You are ready to learn the habits and mistakes that keep ordinary people trapped. That is the next step on this journey. Now, let us explore why most people fail with money. Chapter 3. Why most people fail with money. Many people struggle with money, not because they are lazy, but because they are unfocused. They work hard, earn, spend, and repeat the cycle without ever asking the bigger questions. Why am I doing this? Where is my money going? And what is it building for me in the future? The first reason most people fail is emotional decision-making. Fear and greed are powerful forces that control actions without anyone realizing it. When markets fall, fear pushes people to sell. When prices rise, greed pushes them to buy more than they can afford. They chase trends, headlines, and hot tips, thinking these will create wealth fast. But this behavior often destroys wealth instead of building it. The second reason is lack of patience. We live in a world of instant gratification. People want results now. They want to see their investments double in months, not years. This impatience leads to frequent buying and selling, chasing temporary gains, and often missing long-term growth. The lazy investor knows that wealth grows slowly but surely over years. They embrace patience as a key strategy, understanding that compounding rewards those who wait. The third reason is overcomplication. Some try to follow every piece of financial advice they see. They invest in too many products, take unnecessary risks, and fail to understand what they own. This approach creates confusion and leads to mistakes. The lazy investor, in contrast, keeps things simple. They focus on a few core strategies and execute them consistently over decades. The fourth reason is lack of discipline. Spending more than you earn is one of the fastest ways to fail financially. Even high earners struggle if they do not control their expenses. Debt becomes a burden. Luxury replaces freedom. The lazy investor knows that discipline is more important than intelligence. A simple habit of saving a portion of income and investing it consistently will outperform most other strategies. Another critical reason people fail is trying to control the uncontrollable. They believe they can predict markets, economic shifts, or company performance with certainty. This illusion of control leads to unnecessary risks and stress. The lazy investor focuses only on what they can control: savings rate, asset allocation, and emotional discipline. Everything else is left to the market, which over time rewards patience and consistency. Most people also fail because they do not start early. They postpone investing, thinking they have time. But every year, lost is money that does not have the chance to grow with compounding. Time is the silent partner of wealth creation, and the lazy investor starts early to maximize this invisible advantage. Another reason is ignoring simplicity. People chase complex strategies, exotic assets, and insider tips. They believe that more complicated strategies are smarter. But in reality, complexity often leads to errors and anxiety. The lazy investor knows that simple, proven methods outperform complicated schemes almost every time. Finally, most people fail because they lack a plan. Without a plan, money is reactive. It is spent, earned, and moved around without purpose. A plan turns money into a tool. It gives direction and purpose. The lazy investor creates a simple plan, sets it on autopilot, and then follows it consistently. Understanding why most people fail is critical. It teaches us what to avoid. It shows that success is not about luck or genius. It is about avoiding mistakes, staying consistent, and embracing a simple system. Once we understand the pitfalls, we can see the magic behind one of the most powerful tools in wealth building, a tool that works quietly, consistently, and exponentially. That tool is compounding. Next, we will explore the secret of compounding and why it is the foundation of the lazy investor's strategy. Chapter 4. The Secret of Compounding. Compounding is often called the eighth wonder of the world. It is the quiet force that turns small investments into extraordinary wealth over time. Yet most people do not fully understand it. They see only the initial numbers and assume growth will be slow or insignificant. But the magic of compounding lies not in speed. It lies in patience. It lies in consistency. And it lies in letting time do the work for you. Think of compounding as a snowball rolling down a hill. At first, it is small and slow. You hardly notice it growing. But as it rolls, it picks up more snow. It gains momentum. And soon, the snowball becomes massive, unstoppable, and powerful. This is exactly how money grows with compounding. Every dollar you invest earns returns. Those returns start earning returns themselves. And over years, this cycle multiplies your wealth beyond what most people imagine. The lazy investor loves compounding because it works while you sleep, travel, or spend time with family. It does not require constant attention. It does not depend on guessing the next big trend. It simply rewards patience and consistency. The longer your money stays invested, the greater the effect. Even small investments today can grow into enormous sums decades later. One of the most important lessons about compounding is starting early. Every year you wait is a year lost. Delaying investment by even a few years significantly reduces the final result. The lazy investor understands this principle. They start with what they can afford, even if it seems small, because time magnifies small amounts into life-changing wealth. Another key lesson is reinvestment. Do not withdraw your earnings. Let them stay and continue to generate returns. Every time you take money out, you reduce the power of compounding. The lazy investor treats their investments as a garden. They plant seeds. They water them. They allow them to grow year after year. And they resist the temptation to dig up the garden before harvest. Compounding is not limited to money. It applies to knowledge, habits, and skills as well. Learning a new concept today builds your ability to learn more tomorrow. A good habit practiced consistently strengthens over time. The lazy investor applies compounding not just to money, but to life itself. The most challenging part about compounding is patience. It is human nature to want immediate results. We check balances every day. We panic at small declines. But compounding is immune to short-term fluctuations. It rewards the calm, the disciplined, and the persistent. It punishes those who act impulsively. Compounding also teaches humility. You cannot force it. You cannot speed it up artificially. You can only set the conditions for it to work. Save regularly, invest wisely, and leave your money alone to grow. Understanding the power of compounding naturally leads to the next secret of the lazy investor. Time. Time is the greatest ally for building wealth. The more time you give compounding, the more effortless and extraordinary the results become. In the next chapter, we will explore time is your richest asset, and why starting early and thinking long-term is more valuable than any shortcut or strategy. Chapter 5. Time is your richest asset. Time is often overlooked in the journey of wealth creation. Most people focus on how much money they can earn, not how long they can let it grow. But the lazy investor knows that time is far more powerful than money. Even a small sum invested early can grow larger than a huge sum invested late. This is the true advantage of starting as soon as possible. Consider two people. The first starts investing a small amount in their 20s. They continue consistently for a few years and then stop. The second starts much later in life with a larger sum but has less time. Surprisingly, the first person often ends up wealthier. Time magnifies the effect of compounding. It is the silent partner in every investment. The longer you give your money to grow, the greater the exponential effect. Time also works in other ways. It allows mistakes to be corrected. It allows strategies to unfold without constant interference. It reduces risk when combined with patience. The lazy investor understands that rushing leads to errors. Time, when respected, reduces the need for frequent decisions. It allows money to grow quietly in the background while life continues. Another advantage of time is the ability to ride out market cycles. Markets will rise and fall. Economic crises will come and go. If you start early and stay invested, time will smooth out the highs and lows. Short-term losses become insignificant compared to long-term gains. This is why the lazy investor rarely panics. They trust time more than timing. Time also enhances learning. When you start early, you have years to observe, adjust, and refine your strategy. You learn from mistakes without jeopardizing your entire future. Experience compounds just like money. Those who begin late have far less opportunity to benefit from lessons learned over decades. The lazy investor uses time to automate growth. They set up systems once and let years do the heavy lifting. Automatic investing ensures money flows into growth vehicles without constant attention. Every month, a small portion of income is invested. Over time, these small steps accumulate into significant wealth, and the investor is free to focus on other areas of life. It is important to remember that time cannot be bought. No matter how much money you have, you cannot create more years, but you can choose when to start. The earlier you begin, the more leverage you have. Time becomes a partner that multiplies your efforts and magnifies your results. Time also teaches humility. We cannot control the market, inflation, or global events, but we can control how long we let our money grow. We can use patience and consistency as powerful tools. This mindset turns ordinary people into extraordinary investors. Understanding the power of time naturally leads to practical strategies. How do you ensure your money grows consistently over the years without constant effort? The answer lies in automation. Automatic investing is the next secret that allows the lazy investor to combine time and compounding effortlessly. In the next chapter, we will explore automatic investing and why setting up systems is the most important step toward building wealth without stress. Chapter 6. Automatic Investing. Automatic investing is one of the most powerful tools a lazy investor can use. It removes emotion, forgetfulness, and procrastination from the wealth-building process. Most people fail to invest consistently because they rely on willpower. They plan to save at the end of the month, but often spend first and save later. By the time they remember, the money is gone. Automatic investing eliminates this problem entirely. The concept is simple. Decide a portion of your income to invest every month. Set up a system that transfers it automatically to your chosen investment account. Once this is done, you do not need to think about it again. No decisions, no excuses, no stress. This small action, repeated consistently, compounds into extraordinary wealth over the years. Automatic investing also protects you from emotional mistakes. When markets rise, many investors get greedy and buy too much. When markets fall, fear causes panic selling. Automatic systems ignore these emotions. They invest the same amount at regular intervals, regardless of market conditions. This approach is called dollar-cost averaging. It reduces the risk of buying at the wrong time. It smooths out market volatility. And it allows your investments to grow steadily without interference. The lazy investor uses automation not only for investing, but also for saving. Automatic transfers to savings accounts, retirement funds, or emergency funds ensure money is protected and working for the future. They do not rely on memory or discipline alone. They rely on systems. Systems that never forget, never panic, and never get tired. Another advantage of automatic investing is simplicity. Once your plan is set up, there is little to manage. You do not need to monitor daily stock prices. You do not need to analyze every market trend. You follow the plan. You let the system execute it. And you focus on living your life. Automatic investing also builds confidence over time. As you see your portfolio grow month after month, year after year, your trust in the system increases. You stop worrying about short-term fluctuations. You start appreciating the long-term trend, and you begin to enjoy the freedom that comes from financial discipline. The key to successful automatic investing is consistency. Even small amounts matter when invested regularly over years. Even a modest percentage of income left to grow can become substantial through compounding and time. The lazy investor knows that effort is required only once to set up the system. After that, the system works for decades. Automatic investing also frees mental energy. Instead of spending hours deciding where to invest, you focus on important life decisions. Your energy goes into growth, learning, relationships, and personal development. Money grows quietly in the background, without adding stress or complexity. Once automatic investing is understood, the next natural step is choosing the right investment vehicle. One that requires minimal attention, costs little, and has a proven record of growth. For the lazy investor, this often means the magic of index funds. In the next chapter, we will explore the magic of index funds and why they are the favorite tool for building wealth effortlessly. Chapter 7. The Magic of Index Funds. Index funds are one of the most powerful tools in the lazy investor's toolkit. They are simple, they are low cost, and they allow anyone to participate in the growth of entire markets without complicated analysis. Most people try to pick individual stocks. They study charts. They read reports. They guess which company will rise next. But even professional investors often fail to consistently beat the market. Picking winners is hard, stressful, and risky. Index funds remove this burden entirely. An index fund is a collection of many companies bundled together. It tracks a market index, such as the total stock market or a group of leading companies. When the market grows, your investment grows with it. When the market falls, you experience some decline, but history shows that markets recover over the long term. This approach reduces risk and simplifies investing. The magic of index funds is that you do not need to be an expert to succeed. You do not need to follow daily news. You do not need to analyze balance sheets. You simply invest. You stay consistent. And you let the market do the work for you. Another advantage is cost. Index funds have very low fees compared to actively managed funds. High fees can quietly erode your wealth over time. The lazy investor chooses low-cost index funds to maximize the effect of compounding. Every percentage saved on fees is extra growth in your pocket. Diversification is also built into index funds. By owning a single fund, you hold pieces of hundreds or even thousands of companies. This spreads risk. A failure in one company does not destroy your investment. Your portfolio grows steadily with the overall market. It is a strategy that combines safety with growth. Index funds also encourage patience. Because they are designed for long-term growth, the investor does not worry about short-term volatility. They do not react to daily news or temporary drops. They understand that wealth is created over years, not days. The lazy investor may combine a few index funds to balance risk and return. For example, one fund may cover domestic stocks, another international stocks, and a small portion in bonds. This simple mix creates a strong foundation for long-term growth. It is enough to achieve financial independence without constant monitoring or complex decisions. Many people miss the power of index funds because they look for excitement. They want quick gains, hidden secrets, or insider tips. But the magic of index funds lies in doing less. Doing less consistently over decades produces results far beyond effort-intensive strategies. The lazy investor also understands the emotional advantage of index funds. Because the fund represents the entire market, they are less likely to panic during downturns. They trust history. They trust the system. And they trust time. Once the lazy investor masters index funds, the next step is learning to ignore the noise. Markets will always have headlines screaming fear or hype, but reacting to every sound is the fastest way to destroy wealth. The next chapter will explore avoiding the noise and why silence is often more profitable than action. Chapter 8. Avoiding the noise. One of the biggest challenges for investors is noise. Noise comes in many forms. Headlines screaming market crashes. Experts predicting the next big boom. Friends or family giving advice based on fear or excitement. Social media posts promising instant wealth. All of this creates pressure to act, often impulsively. Most people react to the noise. They buy high out of greed. They sell low out of fear. And in the process, they destroy wealth instead of building it. The lazy investor learns early that noise is meaningless. Short-term market fluctuations do not matter in the long run. Economic crises, political uncertainty, and temporary trends are all part of the system. Instead of panicking, the lazy investor stays calm and focuses on what they can control: their plan, their savings rate, and their mindset. Avoiding noise requires discipline. It means not checking investment balances every day. It means not reading every financial headline. It means not reacting to every opinion or trend. The lazy investor understands that the more you react to noise, the more likely you are to make mistakes. Action without thought is the fastest way to lose money. Another way the lazy investor avoids noise is by keeping a simple investment strategy. A clear plan acts as a filter. When everything is simple, it is easier to ignore distractions. For example, If you have a core portfolio of index funds, a small market drop does not require panic selling. Your strategy is long-term. Your plan is proven. Noise has no power over your results. Avoiding noise also requires emotional control. It is natural to feel anxious when markets fall, or excited when markets rise. But emotions are dangerous in investing. They push people to make decisions based on feelings rather than facts. The lazy investor practices detachment. They treat market swings like waves on the ocean. They do not try to fight them. They ride them calmly, knowing the tide always turns in the long run. Silence is powerful. The less you react, the more consistent your growth. The lazy investor prefers steady progress over excitement. They understand that wealth is built quietly, far from the chaos of headlines and speculation. Another tool to avoid noise is automation. Automatic investing ensures that decisions are made systematically, not emotionally. Money flows into investments regularly, no matter what the headlines say. This builds wealth without stress and without second-guessing. Avoiding noise is also about mental clarity. When you remove distractions, you can focus on the bigger picture, your goals, your plan, and your long-term growth. Noise may feel urgent, but it rarely matters. Patience, consistency, and discipline always win in the end. Once noise is ignored, the next step is designing a portfolio that is simple, manageable, and reliable. A portfolio that does not demand constant attention. A portfolio that quietly grows over time. That is the focus of the next chapter, building a boring portfolio. Because boring often beats exciting when it comes to long-term wealth. Chapter 9. Building a boring portfolio. The idea of a boring portfolio might sound dull. Most people imagine investing as exciting stock picks, trending assets, or high-risk opportunities. But excitement in investing often leads to mistakes. The lazy investor knows that boring works. Consistency and simplicity create results far beyond temporary thrills. A boring portfolio is diversified, balanced, and easy to manage. It does not require daily monitoring. It is not influenced by market hype or fear. It is designed to grow steadily over decades. The goal is long-term wealth, not short-term adrenaline. The first step in building a boring portfolio is asset allocation. This means dividing investments into categories, such as stocks, bonds, and sometimes real estate. The proportion depends on goals, risk tolerance, and time horizon. Stocks offer growth but fluctuate. Bonds offer stability but lower returns. A balanced mix reduces risk while still allowing wealth to grow. Index funds play a major role in a boring portfolio. They provide broad market exposure and reduce the need for stock picking. With a few well-chosen index funds, you can cover domestic markets, international markets, and different sectors. This simple structure removes complexity while giving reliable growth over time. Rebalancing is another key aspect. Markets move. Some assets grow faster than others. Rebalancing means adjusting your portfolio to maintain the desired allocation. The lazy investor does this periodically, perhaps once a year, and then returns to doing nothing. This ensures risk remains controlled and growth stays steady. A boring portfolio is also cost-conscious. Low fees matter. High management fees, frequent trading, and unnecessary financial products quietly erode returns. The lazy investor prioritizes low-cost investments, keeping more of their money working for them. Patience is essential. A boring portfolio does not produce instant thrills. It grows steadily and quietly, compounding over years. The lazy investor resists the temptation to chase trends or react to headlines. They know that staying the course beats constant adjustments. Another advantage of a boring portfolio is emotional resilience. When markets fluctuate, a diversified, balanced, and simple portfolio reduces anxiety. It allows the investor to sleep well, even during downturns. This mental peace is part of the real wealth that lazy investing creates. The lazy investor also applies boring principles to financial habits. Regular saving, automatic investing, and avoiding lifestyle inflation create consistency. Over time, these small, steady actions accumulate into significant wealth. The portfolio does not need to be flashy to be effective. It needs to be reliable, resilient, and persistent. In a world obsessed with excitement, the lazy investor understands that wealth is often boring. It is built quietly, patiently, and consistently. The thrill of speculation is replaced with the calm of compounding, discipline, and simplicity. Once a boring portfolio is established, the next step is understanding the mental side of wealth. Investing is not only numbers and systems, it is also emotions, habits, and mindset. In the next chapter, we will explore the psychology of wealth and why mastering your mind is as important as mastering money. Chapter 10. The Psychology of Wealth. Money is not just numbers on a screen or coins in a bank. It is deeply tied to emotions, habits, and beliefs. The lazy investor knows that understanding psychology is as important as understanding investing. Without control of the mind, even the best strategies can fail. One of the most common psychological traps is fear. Fear causes people to sell investments during downturns. They panic when markets drop and lock in losses. This behavior is costly because markets naturally fluctuate. Temporary declines do not erase long-term growth. The lazy investor acknowledges fear, but does not act on it impulsively. They recognize it, accept it, and continue with their plan. Greed is another dangerous emotion. When prices rise quickly, people become overconfident. They take unnecessary risks, buy speculative assets, and ignore limits. The lazy investor treats gains calmly. They do not let temporary success override long-term discipline. They understand that slow, steady growth beats short-lived excitement. Discipline is central to the psychology of wealth. Most people fail because they cannot consistently save or invest. They spend impulsively. They chase trends. They abandon plans at the first sign of difficulty. The lazy investor builds habits that reinforce discipline. Automatic investing, regular saving, and sticking to a simple portfolio create consistency. Over time, these habits compound into extraordinary results, just like money itself. Patience is another essential element. Human nature seeks immediate rewards. We want to see progress quickly. But wealth is built over years, not weeks. The lazy investor embraces this reality. They understand that compounding and time reward those who wait. Patience allows them to make rational decisions instead of emotional ones. The lazy investor also controls expectations. They do not compare themselves to others. They understand that wealth is personal. Short-term performance or flashy successes of others do not dictate their path. They focus on their plan, their goals, and their progress. This reduces stress and avoids unnecessary mistakes. Another key aspect of psychology is simplicity. A clear, simple plan reduces mental friction. When choices are few and rules are clear, emotions have less opportunity to interfere. Simplicity in investing is not only efficient, it is protective. It shields the investor from panic, greed, and indecision. The psychology of wealth also involves gratitude and contentment. The lazy investor appreciates progress, no matter how small. They do not constantly chase more without reason. Contentment allows them to enjoy the present while their money grows quietly in the background. Finally, the lazy investor avoids overthinking. They set rules and trust systems. Decision fatigue is minimized. Emotions are regulated. Energy is reserved for what truly matters: life, learning, and long-term growth. Mastering the mind allows the lazy investor to harness all the tools discussed so far. Time, compounding, automation, simplicity, and boring portfolios are only effective when guided by emotional discipline. Without mental control, even the best strategy fails. Once the psychology of wealth is understood, it is natural to focus on another essential principle: controlling spending and maximizing investing. In the next chapter, we will explore spend less, invest more, and why this simple habit is the foundation of every wealthy lazy investor. Chapter 11. Spend less, invest more. Building wealth does not begin with earning more. It begins with controlling what you already have. Most people believe that increasing income is the key to financial freedom. But the lazy investor knows that habits around spending are far more important than salary size. No matter how much you earn, If you spend without thought, wealth will remain out of reach. The first principle is simple. Live below your means. Do not buy what you cannot afford. Do not follow trends just to impress others. Every rupee saved is a rupee that can grow quietly through compounding and time. Even small amounts matter. A modest habit of saving and investing regularly adds up over decades. The second principle is to distinguish between needs and wants. Most financial stress comes from spending on things that do not add real value. A fancy gadget, a luxury car, or a lifestyle beyond your means creates pressure. The lazy investor prioritizes essentials and invests the rest. They focus on freedom, not appearances. Automatic systems make spending control easier. By setting aside a fixed portion of income for investing first, you avoid the temptation to spend it. This pay yourself first method ensures that investing is not optional. It becomes a habit, a system that runs without constant decisions. This is one of the simplest ways to build wealth without stress. Budgeting does not need to be complicated. A boring, simple budget works best. Know what comes in. Know what goes out. Save consistently. Invest consistently. Over time, these repeated actions accumulate into substantial wealth. The lazy investor also avoids debt, especially high-interest debt. Borrowing to spend creates pressure, stress, and reduces the ability to invest. Debt is the fastest enemy of financial freedom. By minimizing liabilities, the investor keeps more capital working for them in investments rather than paying interest to others. Another principle is avoiding lifestyle inflation. As income grows, many people increase spending proportionally. They buy bigger homes, luxury items, and unnecessary extras. This habit keeps them trapped in the cycle of earning and spending. The lazy investor resists lifestyle inflation. They keep spending habits consistent while allowing investments to grow. The gap between income and spending is what fuels wealth. The principle of spending less is closely tied to the principle of investing more. Every rupee saved should be directed to a system that grows over time. Automatic investing, low-cost index funds, and a boring portfolio ensure that money works for you rather than against you. The lazy investor focuses energy on creating long-term value instead of temporary satisfaction. Controlling spending also reduces stress. Financial freedom is not just about having money. It is about knowing that your life is secure, your future is growing, and you are not trapped by obligations. The lazy investor enjoys this peace while their wealth quietly compounds in the background. Once spending is controlled and investing is consistent, the next step is learning to let go of control. Trying to micromanage investments or predict markets creates stress and often reduces returns. The lazy investor understands that true freedom comes from trust in systems, patience, and letting money do its work. In the next chapter, we will explore letting go of control and why stepping back is one of the most powerful moves an investor can make. Chapter 12. Letting go of control. Many people believe that to succeed in investing, they must control every detail. They check markets constantly, research endlessly, and try to predict every movement. This illusion of control creates stress, mistakes, and wasted energy. The lazy investor understands a simple truth. Control is mostly an illusion. Trying to micromanage investments is like trying to control the weather. You cannot predict every storm or sunshine. You cannot stop a market downturn. But you can prepare. You can build systems that work regardless of conditions. You can focus on what you can control: savings, allocation, and consistency. Letting go of control begins with trust. Trust in your plan. Trust in time. Trust in the power of compounding. Trust in simple, proven strategies like low-cost index funds. When trust replaces fear, stress diminishes, and decisions become clearer. Another part of letting go is accepting uncertainty. No one knows the future. Markets will rise and fall. Economies will grow and contract. Unexpected events will occur. The lazy investor accepts this reality. They do not try to predict it. They prepare for it through diversification, patience, and a long-term plan. Delegation is also a form of letting go. Automating investments, using reliable financial tools, and setting up rules reduces the need for constant intervention. This frees time and energy for more important aspects of life. Once systems are in place, the investor steps back. They monitor occasionally, but they do not interfere with every fluctuation. Emotional detachment is critical. The lazy investor avoids reacting impulsively to short-term losses or gains. They do not celebrate temporary highs or panic during lows. They remain calm because they understand that wealth is created over years, not days. Letting go of control also encourages focus on what matters most. Instead of obsessing over individual stocks or daily market news, energy is directed toward increasing savings, learning, and living life. This approach creates peace of mind and allows money to work quietly in the background. Control often creates false confidence. People feel they can outsmart the market. They make frequent trades, chase trends, and increase risk. History shows that this rarely leads to better results. The lazy investor knows that systems, time, and discipline outperform constant intervention. Patience and letting go also build resilience. When unexpected events occur, the lazy investor is ready. They understand that markets recover. They trust their portfolio. They avoid emotional reactions that destroy value. True freedom comes when you accept that you cannot control everything, but you can control your habits. You can control your savings. You can control your strategy. You can control your mindset. Everything else can be left to the system, the market, and time. Letting go of control is not passive. It is strategic. It is deliberate. It creates the mental space and freedom that allow wealth to grow steadily and quietly. Once control is released, wealth begins to influence life in a new way. It becomes not just numbers in a portfolio, but a tool for living fully. This leads to the next principle: wealth as a lifestyle, where money serves life rather than dominates it. Chapter 13. Wealth as a lifestyle. Wealth is more than just money. It is a tool. It is freedom. It is the ability to live life on your own terms. The lazy investor understands that true wealth is not measured by how much you have, but by how well your money serves you. Living wealthy does not mean extravagance. It does not mean buying the latest gadgets or luxury items to impress others. It means creating a life of freedom, security, and choice. When your money grows quietly in the background, you can focus on what truly matters: health, relationships, learning, and experiences. One key principle is intentional spending. Every expense should serve a purpose. Does it bring value to your life? Does it save time, improve well-being, or enhance your future? If the answer is yes, spend. If the answer is no, save or invest instead. This approach turns money into a servant rather than a master. Time becomes your most valuable asset in a wealthy lifestyle. Because investments grow automatically, you can spend your time on what you love. Work can become optional or chosen for passion rather than necessity. Travel, hobbies, learning, and personal growth become possible without financial stress. The lazy investor prioritizes experiences over possessions, understanding that memories and skills last longer than material goods. Another element of wealth as a lifestyle is giving. Financial freedom allows generosity. Helping family, friends, or communities creates meaning and purpose. The lazy investor knows that money is not just for accumulation. It is for building a life that benefits both themselves and others. Health is also central. Without good health, money loses much of its value. The wealthy lifestyle includes attention to physical, mental, and emotional well-being. Exercise, proper nutrition, rest, and mindfulness create a foundation for enjoying life. Wealth grows quietly in the background, while energy and vitality are used to live fully. Simplicity remains a guiding principle. A wealthy life is not cluttered with unnecessary possessions or commitments. Time, energy, and money are focused on what matters most. This reduces stress and enhances the ability to enjoy life. Financial freedom also brings choice. The lazy investor can choose where to live, what to do for work, and how to spend each day. This freedom is the ultimate reward of consistent saving, investing, and patience. It is the reason why time, compounding, and automation are so powerful. The final aspect of a wealthy lifestyle is peace of mind. Knowing that you are prepared for the future, that your money is growing steadily, and that you are free from financial fear is priceless. Wealth as a lifestyle is about living fully while your investments quietly do their work. Understanding wealth as a lifestyle naturally leads to the final chapter, the lazy investor mindset, which ties together all principles and shows how to live successfully, stress-free, and consistently rich over a lifetime. In the next chapter, we will explore the mindset that makes all these strategies work and why it is the ultimate key to financial freedom. Chapter 14. The Lazy Investor Mindset. The final chapter is about mindset. The mindset of a lazy investor is what turns simple strategies into extraordinary results. Without the right mindset, even the best tools, time, compounding, automatic investing, index funds, and patience, can fail. With it, ordinary people can achieve financial freedom and live life on their terms. The lazy investor mindset begins with trust. Trust in your plan, trust in the system, and trust in time. Markets will fluctuate. Economic crises will occur. Unexpected events will happen. But by trusting in consistent, proven strategies, the investor stays calm. Trust replaces fear. Trust replaces doubt. Another critical aspect is patience. Wealth is not created overnight. It grows quietly, steadily, and exponentially over years. The lazy investor resists the temptation to chase quick wins. They embrace the slow and steady path, knowing that compounding rewards persistence. Simplicity is a hallmark of the mindset. Complicated strategies, constant trading, and chasing trends create stress and mistakes. The lazy investor focuses on a few core principles: save regularly, invest consistently, diversify, and automate. Complexity is avoided because simplicity produces better long-term results. Discipline is equally important. Automatic investing, avoiding debt, controlling spending, and resisting lifestyle inflation all require consistent habits. The lazy investor builds systems that enforce discipline. They do not rely on willpower alone. Systems reduce errors and make wealth creation effortless. Emotional control is another key trait. Fear, greed, and impatience are the greatest enemies of investing. The lazy investor acknowledges these emotions, but does not let them dictate actions. They step back, breathe, and let the system work. They understand that reacting emotionally often leads to losses. Focus is part of the mindset. Instead of being distracted by noise, trends, or other people's opinions, the lazy investor concentrates on what matters: long-term growth. They avoid comparison, ignore hype, and maintain clarity. Every action, every decision, and every habit aligns with a long-term plan. The mindset also includes humility. No one can predict markets with certainty. No one knows the future perfectly. By accepting this, the lazy investor avoids overconfidence. They prepare, plan, and act where control is possible. Everything else is left to time and systems. Gratitude and contentment are subtle but powerful aspects of the mindset. The lazy investor appreciates progress and does not constantly chase more. They enjoy life while wealth quietly grows. Peace of mind, freedom, and security become the real rewards. Finally, the lazy investor mindset is about consistency over perfection. Perfect timing, perfect stock picks, or perfect strategies are illusions. What matters is showing up, month after month, year after year. Small, disciplined actions create extraordinary outcomes over decades. This mindset ties together all the chapters: understanding why most people fail, embracing compounding, using time as an ally, automating investments, simplifying strategies, controlling spending, letting go of control, and building a lifestyle that serves life rather than money. The lazy investor mindset transforms ordinary people into extraordinary wealth builders. It is not about working harder or faster. It is about working smarter, patiently, and consistently. With this mindset, anyone can achieve financial freedom. Anyone can live a life of choice, peace, and abundance. By cultivating this mindset today, applying the principles consistently, and trusting the process, you are setting yourself on a path where wealth grows quietly in the background while you focus on living fully. The journey of the lazy investor is not just financial. It is a journey toward freedom, simplicity, and a better life. Conclusion. The journey of the lazy investor teaches a simple but powerful truth. Wealth is not created by constant effort, luck, or complicated strategies. It is created by patience, consistency, discipline, and smart habits. Ordinary people can achieve extraordinary results when they understand the principles of time, compounding, automation, and simplicity. Throughout this audiobook, we explored key strategies that make investing effortless and effective. Starting early, saving regularly, and letting money grow quietly are far more powerful than chasing trends or trying to predict the market. Low-cost index funds, boring portfolios, and automatic investing systems remove complexity and emotion from the process. Equally important is the mindset. Fear, greed, impatience, and noise are obstacles that destroy wealth. The lazy investor develops emotional control, trust in the system, and discipline to stay the course. They focus on what they can control and let go of what they cannot. They build habits that compound not only money, but also knowledge, skills, and confidence over time. Financial freedom is not about extravagance. It is about choice, peace of mind, and living life on your own terms. A wealthy lifestyle means spending intentionally, enjoying experiences, helping others, and maintaining balance in health, relationships, and personal growth. The lazy investor does not rush. They do not seek shortcuts or quick wins. They understand that ordinary actions, repeated consistently over decades, produce extraordinary results. This approach is stress-free, sustainable, and reliable. By following these principles, anyone can turn ordinary income into extraordinary wealth. The key is to start today, no matter how small the steps. Time, patience, and disciplined habits are on your side. With the lazy investor mindset, wealth becomes not just a number, but a tool for freedom, security, and a life well lived. Remember, the journey is simple but not always easy. Stick to the principles. Trust the process. Be patient. And watch as ordinary actions create extraordinary results. Your path to financial freedom begins now. The power of being a lazy investor is that you do not need to work harder. You need to work smarter, consistently, and with faith in the long-term process. This is your guide, your system, and your mindset. Apply it, embrace it, and let your wealth grow quietly while you focus on living your best life.